What's up, investors? It's the Russian dude. Let me give you an extremely short summary about the Federal Reserve, the statements by Jerome Powell, interest rates, whether there will be hikes, cuts, how many of them, and when to expect them. A lot happened in the last couple of weeks, so I think this will be an extremely important video for every single one of you to see. To begin with, just 1 month ago, the situation was completely different. For example, inflation was barely budging, it was even going up in some particular sectors of the economy. Labor market was strong, unemployment was low. Basically, everything was against the Federal Reserve to start cutting rates. However, 81% of market participants still thought that there will be at least 2 rates cuts by the end of this year. And every single FOMC meeting was exactly following the very same script. We need more data, we don't know anything right now to make any decisions, but yes, we do want to start cutting the rates, we just don't know when. And even Jerome Powell himself, he did say that if you start cutting the rates too soon, this might reaccelerate the inflation, pretty much undoing all the progress they did previously. But if you keep the rates high for an extended period of time, this might stall the economy and it will be much harder to restart it in the future. And by the way, worth mentioning, it is right now the interest rates are in between 5.25 and 5.5%. And as the time passed, fewer and fewer market participants were believing that there will be any rate cuts by the end of this year. Some were even entertaining the possibility of interest rate hikes. And then, literally just one day, Jerome Powell said, well, screw it, let's do it. We're not gonna longer wait until our target inflation of 2%, we're gonna start cutting rates, whatever happens. And he was literally contradicting his own statement which he mentioned just a couple of days before, about that if you do cut rates way too early, you might undo the entire progress. And his justification was the following. The reason for preliminary interest rate cuts is the lag effect. Basically, you start reducing the interest rates so they become a little bit smaller right now, but still the economy is experiencing the consequences of higher rates which were before you did cut them. Pretty much, the entire decision is based on the hope that the economy will not start feeling the consequences of lower rates way too early. And this is exactly the pivot of the Federal Reserve everyone is talking about, basically whenever they switch from economical tightening to easing. And the ultimate goal here is that the lower rates will help the economy to restart and boost itself. But the main question is the economy even in such a horrible shape after all? Because personally, I don't think so. Because just think about it, the unemployment is relatively low, labor market is pretty strong, the stock market updated several times its all-time high numbers. It does not look like the economy which is struggling. Except the inflation, of course, which to be honest it's not catastrophical, and the housing market, because at this very moment we are in one of the worst periods where the housing affordability is one of the lowest. So, does the economy need this boost in form of lower interest rates right now? Well, once again, I do not think so. The only place where lower rates are urgently needed is the US national debt, but this is the topic for another video. Instead, if the rates go down too early, once again, this can undo the entire progress, the inflation reaccelerates once again, and yes, this is exactly what Jerome Powell himself was warning against literally just several days ago. Housing will become even more unaffordable, because the very basic understanding that lower rates means higher house prices. But still, this is what the Federal Reserve decided to do. And once again, there are no yet clear dates when the interest rate cuts might happen, but at least there are some very good assumptions. The earliest possible one can be even in the end of July, but a lot of people assume that the very first rate cut will happen in September and then maybe another one will happen in December. So the biggest expectation right now is that there will be 2 interest rate cuts by the end of 2024, bringing current interest rates of 5.25 to 5.5 to 4.75 to 5%. Most likely we will not see any interest rate hikes this year, but just like the Federal Reserve says, we need more data. Well, there you have it, guys. Hopefully everything is more clear right now. If you found this video interesting, informative, or both, please like this video and subscribe to my channel, and see you on Monday.